Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, hope you're having a good long weekend. We can see the Facebook bulls were out again on Tuesday. Look at the move that we've seen here. 115 up to 129 in just about 2 weeks. Big time gains, 10%, and the trend was broken to favor the bulls when 122.50 became support. That was back on January 6th, the same day that we broke out above the upper Bollinger Band, and been seeing a lot of strength since then. We do have an upper wick of profit taking, so we're going to have to keep an eye on that. As long as we continue to close above the upper Bollinger Band, the bulls are in control. That new resistance is 129.27. There's a gap to fill down at 126.73. And the key support now, because we had this little consolidation on the breakout, and that's at the 100-day moving average. So we know that's a key level for the bulls to hold, to maintain higher lows and continue with this very strong trend to start 2017. So we know Facebook is doing a buyback in Q1 2017. Certainly would not be surprised for that to be some of the factor we're seeing here. And the fact that Facebook is the strongest tech name in 2017, certainly doing a lot of catching up because it was nowhere near the strongest tech name in November and December of 2016, but very clearly trying to catch up here to all those other bulls. Look at that follow through these 2 weeks, increasing bull volume, heading in for a bullish MACD cross, and we're eyeing the all-time high here. Weekly resistances, there's not many. 132.12, 133.50, we've got 130 psychological as well, but we are right on the verge here of these all-time highs, and we're going to have to see if the charts get set up heading into earnings for a blue sky breakout. But either way, we know the bulls have a lot of momentum and strength here, and we're going to be watching very closely to see if it is maintained with strong showings of new supports established. Because right now, the strength of this move to the upside, like I said, we only have that one little base of support established on the way up, and I would be much more confident as a bull if we were to see a lot more showings of support strength, because right now we're just seeing bullish momentum to the upside, not many pullbacks and back tests of support. So looking at Facebook on the shorter term time frames, and it's been one beautiful hourly chart, just higher lows and higher highs. Let's look at the 10-day hourly, and you cannot ask for a better uptrend than that. And we're still in full control. The 20-period moving average is support. And checking in on the 5-minute time frame to see how the trading action on Friday went, we could see that the bulls were strong right out of the gate. Look at the volume on that first 10-minute move. We consolidated. Bulls held exponential moving average support. Saw a lower high form, so we had a little bit of a double top to keep an eye on at 128.85, 128.83. But we kept the higher low pattern alive, and there's your bull break with the new high of the day. Personally, I would have likely been out as a bull once this 20-period 5-minute moving average support was broken. That was the first time it became resistance for the day. We did see a nice little recovery heading back to the high of the day. Again, that level was 129.27. We got up to 129.24 and then pulled back. So we now have a little double top of resistance at the high of Friday to be watching this coming week. And in terms of the hourly, We did have some times here where we did close below the 20-period moving average, so it's certainly not game over if we lose this 20-period support, but that would be a heads up to me. Heads up that further consolidation, more significant than we've seen yet on this move to the upside, could be coming. So if we have this 20-period hourly as resistance, I would be a lot quicker to lock in profit, and I would certainly want to be keeping a close eye on things because we could see that consolidation that we know is coming by looking at that daily chart. It's just a question of when. So I appreciate you watching. We'll check back in on Tuesday to see how the start of next week goes. S&P 500 is on the verge of an all-time high, and that will certainly only help the bulls if we get blue sky breakout in the markets. Thanks for watching. I'll see you then.